What's up, everybody? Today we are going to be talking about Alibaba. This stock is a rather controversial stock, I think I would say, in the investing world. Some people love it, some people hate it. Baba is famously one of the final purchases of the late great investor Charlie Munger, who you may know as Warren Buffett's right-hand man and second in command at Berkshire Hathaway for a very long time. He bought in 2021 somewhere in the 200s, and then I think he doubled down on his position as it fell. Regardless, even though the past 1 year on this stock looks amazing, up 40%, it has not been a fun ride holding this stock over the past 5 years. And I would know because I have held Baba stock for almost 4 years now. I bought in at around $160 a share. I added a bit at 80, and I have just been holding this stock the entire time. I am still down on my position. I think I can say that I made a mistake with this stock, especially buying at 160. And I'll talk a little bit at the end of this video about what I can take away from that mistake. But what we should be concerned with right now, and I'm sure what you're interested in right now, is Alibaba a good investment today? We know what's happened in the past. The question is, going forward in the future, are we getting a good risk reward holding Alibaba shares? Now, many of you are probably familiar with Alibaba, but you might not realize how many businesses they are actually involved in. They have their hands in the cookie jar of so many different things. First and foremost, they have their Chinese e-commerce marketplace that is primarily Taobao and Tmall. This is their moneymaker. It is the highest margin segment. I mean, pretty much all their earnings come from Taobao and Tmall. They're still the market leader in e-commerce in China. And yes, there is a lot of competition in that landscape. You have JD.com, which you may know that I'm a big fan of. They have Pinduoduo, which is the parent company of Temu. There's Douyin, which is TikTok in China. And you have a bunch of others like Kuaishou, and there's a few more. But even though Alibaba is not the fastest growing e-commerce company in China, they are still the market leader. And they are also the market leader in cloud in China. And while over the past few years, cloud has been a bit of a disappointment, the growth has been lower than what I thought it would be. Now that is showing signs of turning around and accelerating here. They also have their international commerce segment, and this has been growing extremely quickly. However, it is not a profitable segment. They are losing money on this. Now, that's not uncommon for companies to accept negative or lower margins to expand quickly into new markets, to take over market share in other countries. And if the margins do start to turn on this segment, that could be a huge catalyst for Alibaba stock, but I don't consider that a guarantee. Moving along, you also have their segment for logistics, deliveries, warehouses, and local services group, which is primarily LEME, which is essentially Alibaba's Uber Eats. This has been growing decently well, but again, they are losing money on this segment. The operating margins are negative here because they're trying to compete with Meituan, who is the market leader. And then you see they have a bunch more businesses over here, plus a partial stake in Alipay. So, I mean, Alibaba is just in so many different things. And I think that there are a number of tailwinds that could be helping this company in the future. China is trying to stimulate their domestic consumption right now, and Alibaba would probably be one of the biggest beneficiaries of that. Also, the wave of AI spending and cloud usage is really accelerating right now in China, and Alibaba is the market leader here. You can see from my sheet that revenue and earnings for this company had just been growing almost exponentially up until the pandemic. Then they stagnated for several years. China was under lockdown for a good amount of this time. Consumption was not growing, but you see that growth is starting to pick back up. And in their most recent quarter, the year-over-year growth is starting to see acceleration from where it has been. For the heart of their business, their Chinese e-commerce, their customer management revenue, which this is basically merchants paying Alibaba for ads, display ads, search ads, prominence on their website, and 12% year-over-year growth. This is excellent. This is an acceleration from where they have been. Cloud revenue also, this past quarter, it was up 18% year-over-year. This has been more like 10% growth year-over-year for the past few years. So this is excellent to see. I also want to point out their balance sheet is absolutely incredible. $50 billion US net cash position. That's amazing. They essentially have a perfect balance sheet. On this slide, they break down revenue and profitability by segment, and you can really see what I mean by all their money is made by Chinese e-commerce. Adjusted earnings before interest, taxes, and amortization is 42 billion renminbi for this segment, which is like 6 billion US. The cloud segment is now turning a profit as well, which is great to see, but You see all these other segments, they're losing money. Now, one thing that makes me optimistic is you're starting to see in this quarter some of their segments paring back their losses. International commerce has grown the top line 22%, but this quarter you're seeing that the amount of money they're losing on the segment has gone down from a year ago. And this is something we just really started to see the past couple quarters, so they're becoming more efficient. Similarly, LME, that Uber Eats segment that they have, growing at 10%, but the loss on the segment coming back a little bit. And this is still like a negative 15% margin, which isn't great, but a significant improvement from where they've been a year ago. Honestly, if you just consider everything other than Chinese e-commerce, everything here is a big zero. Their international commerce, their cloud, their stake in Alipay, literally everything. You say, okay, imagine that all breaks off into, another separate entity that's worth absolutely nothing. And what you're left with is just Chinese e-commerce, which is making, roughly $6 billion US in operating income a quarter. So roughly, let's say 24 billion-ish US of operating income a year on a market cap of 250 billion and an enterprise value of even less because of their net cash position. You're basically looking at the market leader in Chinese e-commerce that's growing, 9% on the top line in this most recent quarter, trading for just 10 times operating earnings. And again, that's assuming everything else here is a complete zero, which even though these segments are not contributing to the bottom line right now, in fact, they're a negative, I think there's going to be value here. In particular, I'm optimistic about cloud and international commerce. On their call, they kind of said they're having a tough time even keeping up with consumer demand in cloud. Looking ahead, we expect AI to remain a key driver of accelerated revenue growth for Alibaba Cloud. We continue to see growing demand for cloud and AI, an opportunity that will define the next 10 to 20 years and will not be derailed by short-term supply chain fluctuations. We're actively exploring solutions to meet rising consumer demand. They recently released their open source ChatGPT competitor Qwen 3, which is shockingly good. I've used it. I actually use it to write code. And I thought that at writing code, it was actually probably better, I think, than ChatGPT. Now, one thing to point out is that because of all the growth in cloud and AI in particular, they've been spending quite a lot of money building out data centers. And if you look at their free cash flow for this quarter, it's down. It looks quite low. And that's mostly because they spent $3.3 billion in, purchase of property and equipment. This is essentially their spend into data centers and just all the upfront costs to support their cloud segment and their growth in the future. Yeah, I'd like to have that cash in my pocket now, but if they're seeing the demand that they say, then, I trust that management is doing an intelligent thing here. And speaking of cash being returned to shareholders, before we wrap this up and look at what we can project going forward for Alibaba, let's talk about share repurchases. Baba has been buying back quite a bit of their stock over the past couple years. You can see quarter by quarter how much they have spent on repurchases here. In the end of 2023 and throughout 2024, they've been purchasing shares pretty much consistently. The share count is down almost 10% over the past couple years. And as the share price has rebounded, they've slowed down on the buybacks, but they are still buying back stock. In fact, if you go to Alibaba's website, they actually put out a next day disclosure, the trading day after they perform a buyback, and they tell you how much they bought. So just looking at the most recent one, we see that on July 9th, they bought 768,000 shares, and the shares that are traded on the New York Stock Exchange under BABA, each one of these shares represents 8 shares under the Hong Kong exchange. So if you're wondering how in the world did they buy back shares at an average price of $13.01 a share? Well, the equivalent for shares you're probably familiar with, the shares that trade under BABA would be 8 times this price. So 8 times 13, that's 104. So 104.8 cents. That was their average purchase price on this day. And we can see they've basically been buying back shares almost every single trading day, about $10 million US in buybacks a day. So that is a slowdown from what they've done in the past, but still it's great to be rewarded as shareholders while we wait, because as you know, I've been waiting on this stock, but the past is the past. What can we expect going forward for BABA today? Well, I assumed in my base case that they are going to grow their top line 7% every year for the next 5 years, and that their margins are going to remain basically where they are now. Now, I think if we see an acceleration in cloud, and also if we see improved efficiency in their international segments, so they trim back the losses on their money-losing segments, I could easily see their margins increasing in the future and their revenue accelerating in the future. I hope that both of those things occur, but I'm not putting them into my base case. And for a multiple 5 years from now, I'm giving them a 15 times multiple. And if all that comes true, you are looking at a 15% return every single year for the next 5 years for this stock, which would be great, would almost certainly beat the market. My bull case would be more where I hope they get to, but just to focus on the downside, side, on the bear case, I'm assuming that revenue does not accelerate from here. In fact, it remains basically flat, in line with inflation. Margins decrease due to increased competition in e-commerce, especially from JD.com and Douyin, and that the multiple compresses even more just to a 10 times multiple. And yet, if that happens, you are going to be down a bit on your money over the next 5 years. I view this as a very pessimistic scenario. I don't think this is likely, but I do consider it a possibility. So all in all, I think the risk reward for Alibaba today looks quite good. As I said, I continue to hold this stock. In a couple months, it will be 4 years that I have held onto Alibaba stock. So I think it's also useful before we end the video just to reflect on what I've learned, because I do think I made a mistake with Alibaba. At the time that I bought it, imagine these right 4 columns aren't here in this graph of revenue and earnings. It just looked like revenue growth was so consistent, and even though I'd actually forecasted revenue growth slowing down over time, I did not anticipate this stagnation. On top of that, the elephant in the room here is this is a Chinese company. There is significant geopolitical risk. And in my base case, I was giving them a 20 times multiple, which to me, I actually thought felt conservative for the market leader in a number of segments that had great growth. But even still, I don't think in my base case, I should have given a company in China a 20 times multiple. When the government can just unilaterally, without warning, crack down on the whole tech sector or enact some policies that would just significantly change the business landscape. So I think I was over optimistic, but as I said, the past is the past. What I'm trying to decide now is Alibaba a good investment going forward? And I don't want the emotions of a past investment to affect my current decision. Looking at the numbers today, I am going to still hold Alibaba stock, but I want to know, what is your opinion of Alibaba? If you're still watching this far, you must be interested. Subscribe to the channel. Let me know where you agree or disagree with me down in the comments below. Do you own Alibaba stock? What do you think about it? And I hope to see you in another video.